We have just updated and released our tanker shipping market overview and outlook report. Let me give you some highlights. The supply and demand balance for crude and product tankers is predicted to tighten in 2024 as increased sailing distances offset the slowdown in oil demand growth and fleet growth remains low. For product tankers, the supply and demand balance may weaken in 2025 because of an increase in fleet growth from ships contracted in 2023, whereas the crude tanker market should continue to tighten. On a macroeconomic level, the IMF predicts global economic growth of 3.1% in 2024 and 3.2% in 2025. As inflation is falling faster than previously predicted and growth remains steady, the risk of a hard landing has reduced. Growth in key countries such as the US, China, Japan and India is expected to slow compared to 2023. Oil demand continued to grow in 2023, increasing by 2.3 million barrels per day. Demand has plateaued in OECD countries, and China, India, Brazil and Saudi Arabia continue to be the main drivers of growth in 2024 and 2025. The IEA expects oil demand to grow another 1.2 million barrels per day in 2024. Sailing distances meantime continue to increase and support demand for tankers. The sanctions of Russian oil remain in place and drives Russian crude exports away from Europe towards Asia. At the same time, oil production is increasing in the Americas, while demand is increasing in Asia. Currently, the attacks on ships in the Red Sea is also adding to distances as ships avoid the Suez Canal and opt for the longer route via Cape of Good Hope. In our forecast, we assume that this will impact the market until mid-2024. However, we can obviously not forecast these developments accurately. On the supply side, we expect that the crude tanker fleet will grow only 1.7% from the end of 2023 to the end of 2025, while the product tanker fleet should grow 6.2%. The Aframax, Suezmax, MR and LR2 segments will grow the fastest. We assume that sailing speeds and congestion will remain on level with 2023 and that supply therefore will grow in line with fleet growth. Demand side risks meantime remain. A slower than expected reduction in inflation and interest rates in Europe and North America could reduce growth. We however judge that the ongoing crisis in China's real estate sector is of even greater concern. A failure to resolve the crisis could hurt consumer confidence further and impact demand for oil. Thank you for watching.